learn about the technique of capital budgeting. So, capital budgeting ಅಲ್ಲಿ ಯಾವ್ಯಾವ techniques ಇದೆ ಅಂತ, as I told in last class, it's like a traditional technique or a non-time adjusted technique, and the second one was discounted cash flow technique or time adjusted technique. Under traditional or non-time adjusted technique, we have ARR, which is also called as average rate of return. The second one was payback period. So these are the two traditional techniques or non-time adjusted techniques under the cost budgeting. And the second one was discounting cash flow technique or time adjusted technique, which comes under discounted payback period, NPV, IRR, MIRR, PI, and NPVI. So now we are going to learn all these things. So under the cash flow, we have a cash inflow and outflow, which is not considered net flow in a capital budgeting, but which expectation only about ARR, rate of return, which is a technique under the capital budgeting, which is also known as traditional or non-time adjusted technique. Uh, for example, for this, if you have the project from 1 4 2018, over the period of time its end on 31st 3 2022, this some of the decisions regarding the investment was not taken on the basis of the time period. So if it starts from 148 till to the 31 3 2025, over the period of project timing, the decision is not based on the timing. First one, which is also called as accounting rate of return. The average rate of return is also called as accounting rate of return. We will consider net profit and not consider cash flow in average rate of return or accounting rate of return. Average annual yield on this project, if example 1 4 2017 was the project starting date and the ending date was 31 3 2022, this is the life of a project. So earning during this life of the project invested in a business, if in case for example for this lifetime 1 4 2017 from 31 3 22 was the life period of the project, invested in the project about 5 crore. Earnings is nothing but a net profit should be more than 5 crore. How much you earned in the life of time of project in comparison of investment made in the project. So what they are telling was the investment that happens is 5 crore. At the end of the project on 31 3 2022, you have to make a profit more than 5 crore, which is a average rate of return or accounting rate of return. In this, the relationship between the net profit versus investment, earning net profit versus investment, was identified in this method. Net profit is after the tax paid to the government. How we will calculate the ARR? First we are going to calculate the annual average earnings, which is after the tax. For example, you have a project from 2017 to 2022. It's a year span of, it's year span of 16 years: 2017, 18, 19, and 20, 21, 22. So here we are finding out the earnings of after profit. How we calculate the earnings of after profit? Annual average earning after tax is equal to annual earning from the project divided by the life of the project. So another format was how to calculate. Later on, we have a format of how to calculate the annual earning after tax, and which is very important for the year of 5 years or more than that. So here we have a sales unit. Sales unit is nothing but it comes to, for example, it comes to 200, 300,000 sales unit. So what is the per unit of selling is called as selling per unit, which is comes to around 1,000, like that. For example, I'm saying it. This makes out the sales A into B, and we should always deduct the total cost. Under the head of total cost, we can come across variable cost, depreciation, fixed cost. Fixed cost is other than depreciation, and we can come to the total cost. After total cost, we always get earning before tax, until unless we didn't deduct the tax here. So earning before the tax, that is from sales minus total cost, we'll get earning before tax. After that we want to deduct the tax, that comes to the G, which is earning after tax. uh, Whereas earning before tax is deducted from the tax, So we will get earning after tax. This how we calculate the annual earning after tax. And let's come to the second part, which is average investment. How the average investment is calculated. If the average investment for the year opening was 100, opening, yeah, from here it will get like opening investment and closing investment for all 6 years, 17, 2017, 18, 19, and 20, 21, 22. Here the opening investment is 100 rupees, 100 rupees under, it's for just examples 2017, or 100 crores, it may be like that. If 100, it's not like that, like it's a illusionary method what I take in the values. Like for example, if you have a 100 rupees for a opening, you will get the, you will put on the, you will put your investment for rupees 20 rupees, which is used for the investment, and you will get the closing of 80,000. This year 2017 closing was opening of 2018, and later on you will use 20 rupees for the investment, and the closing will be 60 rupees. And this 2018 closing will be the opening of 2019, that is 60 rupees. And you will use 20 rupees again for the investment, and the closing will be, sorry, 20 rupees or 10 rupees for a investment, and the next year closing will be 50 rupees. This year closing will be 50 rupees, and 2020 is opening will be 50 rupees. Like that it is goes on. And the formula of average investment is opening investment minus closing investment divided by 2. Whereas average investment during the life of the project, how the average investment during the life of the project is calculated is equal to average total of investment of each year divided by the life of the project. So here we want to have a alert on depreciation. Depreciation can be variable and fixed. Fixed happens in the time basis, and the variable has happens in the usage basis. Note, opening and closing will include working capital calculations. Very important, guys. So later on we'll come to the ARR. For example, we have a certain calculation sums that we are going to learn, and this calculation sums also helps to take your MCQs under certain some circumstances. So go through this very carefully. We have a purchase price of machinery that is comes to 80,000. Installation charges comes to 20,000. Estimation of salvage value of the end of useful life is 40,000. Useful life is 4 years. Working capital requirement is 10 years. And annual earning before tax and depreciation and tax is comes to 65,000, and the tax rate was 30%. Later on, how we will calculate ARR if this method depreciation, this is a part of the question. How will be ARR will be calculated under the basis of depreciation. We have SLM method. Already we all know straight line method is one of the type of depreciation method. And second one was return down value method, that is WDV method, under the rate of 20%. First, we are going to do in SLM method, that is straight line method, whereas we have a depreciation on a straight line, that is the same depreciation for every year. Depreciation is calculation of machinery. Here we also calculated installation. Why? Any machine which has to help for coming working. ಸೊ ಒಂದು ಮೆಷಿನ್ ಯಾವ್ದಾದ್ರು ನಮಗೆ ವರ್ಕಿಂಗ್ ಇದ್ ಬರ್ಬೇಕಂದ್ರೆ ಇನ್ಸ್ಟಾಲೇಷನ್ ಕೂಡ ಇನ್ಕ್ಲೂಡ್ ಆಗುತ್ತೆ. ಸೊ ಇಲ್ಲಿ ಇನ್ಕ್ಲೂಡ್ ಮಾಡ್ತಾ ಇರೋದು ಇನ್ಸ್ಟಾಲೇಷನ್ ನ. ಮೆಷಿನ್ ಪ್ರೈಸ್ ಬಂದು 80,000, ಹಾಗೆ ಇನ್ಸ್ಟಾಲೇಷನ್ ಚಾರ್ಜಸ್ ಬಂದು 20,000. ಇಟ್ ಕಮ್ಸ್ ಟು 1,00,000 ಬರುತ್ತೆ. 1,00,000 ವ್ಯಾಲ್ಯೂ ಆಫ್ ಮೆಷಿನ್ಸ್ ಬಂದು 1,00,000, ವಿಚ್ ಇನ್ಕ್ಲೂಡ್ಸ್ ಪ್ರೈಸ್ ಆಫ್ ಮೆಷಿನ್ ಅಂಡ್ ಇನ್ಸ್ಟಾಲೇಷನ್. ಸೊ ಸ್ಯಾಲ್ವೇಜ್ ವ್ಯಾಲ್ಯೂ ಬಂದು 40,000. ಸೊ 1,00,000ದಿಂದ 40,000 ನ ಮೈನಸ್ ಮಾಡಿದ್ರೆ 60,000 ಸಿಗುತ್ತೆ. 60,000 ಡಿವೈಡೆಡ್ ಬೈ 4. ಸೊ 4 ಇಯರ್ಸ್ ಯೂಸ್ಫುಲ್ ಆಫ್ ಲೈಫ್ ಕೊಟ್ಟಿದ್ದಾರೆ. ಸೊ 4 ಇಯರ್ಸ್ 60,000 ಡಿವೈಡೆಡ್ ಬೈ 4 ಇಸ್ ಇಕ್ವಲ್ ಟು 15,000 ಗೆ ಬರುತ್ತೆ ಡೆಪ್ರಿಸಿಯೇಷನ್. ಸೊ ಇಲ್ಲಿ ನಾವು ಆನ್ಯುವಲ್ ಅರ್ನಿಂಗ್ ಆಫ್ಟರ್ ಟ್ಯಾಕ್ಸ್ ನ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡೋಣ. ವೆರಾಸ್ ಪರ್ಟಿಕ್ಯುಲರ್ಸ್ ಇಯರ್ 1, ಇಯರ್ 2, ಇಯರ್ 3 ಅಂಡ್ ಇಯರ್ 4. So earning before depreciation, earning before depreciation ಬಂದು 65,000. ಇಲ್ಲಿ 6th month ಕೊಟ್ಟಿದ್ದಾರೆ ನೋಡಿ, annual earning before depreciation and tax. ಆ 65,000 ನ ಇಲ್ಲಿ ಪ್ರತಿ ವರ್ಷ ಒಂದೇ ತರ ನೀವು ತಗೋಬೇಕಾಗುತ್ತೆ. ಆಮೇಲೆ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಕೂಡ ಇಲ್ಲಿ ಸ್ಟ್ರೈಟ್ ಲೈನ್ ಮೆಥಡ್ ಆಗಿರೋದ್ರಿಂದ ಎಲ್ಲಾ ವರ್ಷನೂ 15,000 ಬರುತ್ತೆ. ಸೊ ಆಫ್ಟರ್ ದಟ್ ಇಬಿಟಿ ಬರುತ್ತೆ. ಇಬಿಟಿ ಬಂದು 50,000 ಎವ್ರಿ ಇಯರ್ ಬರುತ್ತೆ. ಅದರಲ್ಲಿ ನೀವು ಟ್ಯಾಕ್ಸ್ 30%, 50,000 ಅಲ್ಲಿ ಟ್ಯಾಕ್ಸ್ 30% ಡಿಡಕ್ಟ್ ಮಾಡಿದ್ರೆ ಯು ವಿಲ್ ಗೆಟ್ 15,000. ಆ 15,000 ಡಿಡಕ್ಟ್ ಮಾಡಿದ್ರೆ 35,000 ಬರುತ್ತೆ. ಸೊ ಈ 35,000 ನ ಟೋಟಲ್ ಆನ್ಯುವಲ್ ಆವರೇಜ್ ಅರ್ನಿಂಗ್ ಆಫ್ಟರ್ ಟ್ಯಾಕ್ಸ್, ಆನ್ಯುವಲ್ ಅರ್ಜಿಂಗ್ annual earning ETA, earning after tax 35,000 plus 35,000 plus 35,000 plus 35,000, because 4 years ಆಗಿರೋದ್ರಿಂದ divided by 4 you will come to the 35,000 only. So average investment ಏನಿದೆ ಅದನ್ನ ಹೇಗೆ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ಬೇಕಂದ್ರೆ ಓಪನ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಪ್ಲಸ್ ಕ್ಲೋಸಿಂಗ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಡಿವೈಡ್ ಬೈ 2. ಸೊ ಇಲ್ಲಿ 18,000 ನಾವು ಏನು ಓಪನ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡ್ತೀವಿ ಲಾಂಗ್ ಟರ್ಮ್ ಮೇಲೆ, ಅದ್ರ ಜೊತೆಗೆ ಇನ್ಸ್ಟಾಲೇಷನ್ ಹಾಕಿಸ್ತೀವಿ. ಸೊ ಇಲ್ಲಿ ಪ್ರತಿ ಸತಿ ನಾವು ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಇದು ಮಾಡ್ಕೋಬೇಕು, ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ಕೋಬೇಕಾದ್ರೆ ಎಸ್ಪೆಷಲಿ ಓಪನಿಂಗ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಅಂಡ್ ಕ್ಲೋಸಿಂಗ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ವಿ ಆಲ್ಸೋ ಇನ್ಕ್ಲೂಡ್ ದ ವರ್ಕಿಂಗ್ ಕ್ಯಾಪಿಟಲ್. ದಟ್ಸ್ ವಾಟ್ ಹಿಯರ್ ನಾನು ನೋಟ್ ಹಾಕಿದ್ದೀನಿ. ಓಪನಿಂಗ್ ಅಂಡ್ ಕ್ಲೋಸಿಂಗ್ ವಿಲ್ ಬಿ ಇನ್ಕ್ಲೂಡೆಡ್ ವಿತ್ ದ working capital calculation. So 80 plus 20 plus 10,000 is a working capital plus 40,000 is a salvage value plus 10,000 is a working capital divided by 2. It comes to the 1,60,000 divided by 2, and the average investment is 80,000. So last step but not least, annual rate of return is equal to 35,000, which is the annual average earning after tax divided by average investment comes to the 80,000 into 100%. The ARR is 43.75%. Okay. Next, this is a SLM method, that is client method, and second one is return down value method, which is 20% return down value method. Calculation of depreciation here. The opening balance is 10 lakh as we opening balance is 1 lakh, as we all know. 80,000 plus to 20,000, which is a purchase of machinery, and the installation of machinery uh, comes to 1 lakh. The opening balance is 1 lakh. 1 lakh minus 20% depreciation is 80,000 is a closing balance, and this closing balance comes to the next year opening balance, that is 80,000 minus 20% is based on 80,000. 80,000 into 24,000 comes to 16,000. 80,000 minus 16,000 is 64,000, which is the closing balance of second year, and the opening balance of third year. 64,000 into 20% comes to 12,800. 64,000 is deducted from 12,800 comes to 51,200, and this 51,200 is the opening balance for fourth year, and 51,200 is come to the 20% is 10,240. 51,200 minus 10,240 comes to 40,960. So this 40,960. So now we let calculate the earning after tax, which comes to the particulars, and first year, second year, and third year uh, earning before tax. EBITDA before depreciation and tax comes to 65,000. You deduct 20,000. You deduct all the depreciation. First year we have a depreciation of 20,000. Second year 16,000. Third year 12,800, and fourth year 10,250. 10,250, and we'll come to the EBITDA of 45,000, 49,000, and 52,200, and 54,760 has a EBT. We'll deduct this from 30% of tax, that is 13,500 for the first year, second year 14,700, and 15,660, and the last year 16,428. After that, earning after tax is 31,500, 34,400, and third year 36,450, and fourth year 38,334, and the annual average earning after tax is equal to the what EIT is come up to 31,500 plus 34,300 plus 36,540 plus 38,332 divided by 4. It comes to 35,168. And later on we'll calculate the average investment. Average investment happen opening balance of 1,10,000. 1,10,000 is nothing but 1 lakh is for purchase of machine. 80,000 is for purchase of machinery, and 20,000 for installment, and 10,000 for working capital management, where we always include the working capital management for opening and closing balance. Here it comes to 1,10,000, where depreciation was allocated for 20,000 minus uh, yeah. Here the average investment is calculated on first what is opening balance minus deducted with 20,000, and the closing balance would be 90,000. 1 lakh 10,000 plus 90,000 divided by 2 is a 1 lakh. So this how the average investment is calculated. After that we'll get a average investment for 4 years, that is 1 lakh 82,000, 67,600 and 56,080 divided by 4, it will come to the 76,420. Now we are calculating ARR. 35168 divided by 76420 into 100%, that comes to 46.02 percentage. Thank you guys. Next class we are going to learn about capital budgeting. Under capital budgeting we are going to learn about the cash flow analysis. Have a great day. Thank you.